What's up everybody, Nate here, and the housing market is currently undergoing one of the greatest generational shifts that we have ever seen. In 2022, the housing market has started to cool off, but a lot of experts and investors are worried that this cool off could go into an outright crash, the biggest we have ever seen. The Federal Reserve raising its benchmark interest rates has had a lot to do with that, but today I want to talk about two major problems facing the housing market in 2022 and how that could end up shaping and shifting the market for years to come. Now, the first thing I want to talk about in the housing market is inventory. And you're probably thinking inventory in the housing market has been kind of an issue over the last 2 years, but the issue with inventory is that we didn't have enough homes. Now in 2022, we're starting to gain a lot of inventory. So more homes are being put on the market, more homes are being built, but this is kind of causing an issue for the market in general because, well, there might be way too many homes on the market. Like I said before, initially we had a problem with inventory. As people bought millions of homes in 2020 and in 2021, this meant that there was a scarcity of homes. So there was not enough homes to meet demand, and that meant that the prices for all current homes was going through the roof. Now in 2022, homes are pretty much unaffordable, and with interest rates going up from the Federal Reserve, well, millions of Americans simply cannot afford a home. This was an interesting problem over the last 2 years, and builders started to build new homes. That's exactly what they wanted to do to kind of meet up with demand, and that definitely worked for a little while, but this is the huge issue that we're running into in 2022. We might start to soon have way too many homes on the market. You definitely want to have homes on the market, but in order to reach that supply and demand equilibrium, well, you need to have just a little bit more demand than there is inventory. If inventory starts to outpace demand, well, think about what that means. Houses are basically going to need to be given away because nobody wants one or nobody can afford one. In 2021, builders started to create brand new homes from scratch. I mean, they were literally building homes for millions of people because they wanted to meet demand. Now in 2022, millions of Americans are unable to afford those new home prices. These brand new homes are adding to the inventory of homes on the market, but the problem is nobody can buy them. Right now in the United States, demand is starting to fall for homes, and the Federal Reserve has a lot to do with that. Just in July, they raised their benchmark interest rates by 0.75%. They did the exact same thing in June, and this is the most aggressive that the Federal Reserve has been with its monetary policy in nearly 3 decades. What that means is mortgage interest rates are going up in the housing market. So just a year ago, the average 30-year fixed mortgage interest rate was around 3 to maybe 4%. It has nearly doubled. Now the average is 5 and 6%. And that's if you have really good credit and are putting a large down payment, like 20%. Most borrowers are going to see an interest rate that's a lot higher than that, which is why we've started to see a lot of Americans go for a 15-year adjustable interest rate because those interest rates are typically lower. However, this can be very dangerous as the Federal Reserve continues to raise their interest rates. As they do that, well, those adjustable rates are going to go up. So those borrowers may end up paying a whole lot more in 2022 or in 2023. Obviously, the Federal Reserve is doing this in response to inflation. They want to bring down inflation as fast as possible, so they have to eliminate demand. By eliminating demand, well, people aren't going to be able to spend as much money. People are basically barred out of the housing market as is because prices are too high and mortgage interest rates are also way too high. That only leaves a select few Americans to go out and buy a home, but home builders are seeing a lot of those contracts from people who thought they could afford homes. Well, now they are canceling those contracts. With home contracts for new builds being canceled, well, now home builders are stuck with a home that they already produced. They are now hundreds of thousands of dollars in the hole and they can't find anybody to buy this house. That's a serious problem, and it means that home builders are eventually going to stop producing homes. In 2020 and in 2021, Americans had a lot of money. Interest rates were at 0% and stimulus checks were pretty widely available. Americans were buying homes, and that meant that home builders could continue to produce homes. And even though it was really costly to produce a home because of supply chain issues and the demand really spiking during that time, Americans were in a good enough financial position in order to go out and buy homes. But with inflation reaching 9.1% in July 2022, prices for all goods and services is going up. And there's a potential that we could see a recession around the corner, so many Americans are opting to not buy a home right now, or the ones that were on contract are saying they're not sure if they're going to have a job 6 months to a year from now, so they don't want to get into a mortgage and then have to foreclose on that home later on down the road. All right, so why exactly is that a problem? You'd think if inventory starts going up, then the prices of homes are going to start coming down, and that is exactly what will happen. However, if we have way too much inventory, then the housing market is going to crash. If there is zero demand in the housing market and all there is inventory, well, then that means that nobody is going to be building new homes, and we need new homes to satisfy the infrastructure of our entire economy. We always need places for people to live, and people are always going to want homes, but with demand going down to zero, well, that's a situation like we saw during the 2007 and 2008 housing market crash. Basically, nobody could afford a home, and housing prices eventually went on sale. Some people were getting homes 90 to basically 100% off. Homes were basically given away, and we could potentially see this in the 2022 or 2023 housing market. The second thing that I want to talk about, and the second big problem facing the housing market today, comes from housing values. Now, I mentioned before that housing prices have been out of control, so there has been such high demand and such little inventory that, well, prices have to go super high because there's so many bidding wars. People want homes, but there's just not enough homes for every single person that wants them, making them extremely valuable, and home prices have gone up by 20, 30, and 40% plus in a lot of areas. Naturally, as inventory starts to rise and fewer people are getting homes in the United States, well, prices are going to come down. But what you have to keep in mind is what value really means in the housing market. The current value of a home is what somebody is willing to pay for it. So if a house is listed for $500,000 and somebody ends up buying it for $550,000 or $600,000, then the value of the home is $600,000, not the $500,000 that it was listed for. Obviously, there is an appraisal value, but the only reason that that exists is for tax reasons and for the federal government and the state government. That is a completely separate thing from the actual value of that home. And the inverse can obviously happen, right? So if a home is listed for $500,000 and it only sells for $300,000, then that is the true value of the home. And what we're starting to see in the housing market right now is decreases in a lot of major markets for prices. Prices are coming down because a lot of those homes are way overvalued. And those prices are going to continue to have to come down until people can afford them, because still they are way too unaffordable for the average buyer. Just in my area of Michigan, I have seen some price reductions on homes between 5 and 15%. Why? Because nobody can afford that home. So they have to bring it down to a price where somebody can actually put a bid in on it. What we're starting to see in this housing market environment, though, is that homes that are appropriately priced are still selling super fast. Average turnaround from selling to actually buying a home is currently 14 days in the United States. So what that tells me is that a home that is affordable and is actually within a buyer's range is going to be bought in the United States. We're still going to have those bidding wars, and demand still exists in the housing market. That is a good sign, but the problem is most houses are currently overvalued. So until those houses come back down, until those sellers realize that they need to cut the price on their home in order for it to sell, well, we're going to have a pretty stagnant housing market. And that means that houses are not going to get bought. And if this happens for a very long time, well, then we could see an outright crash, because now sellers are trying to sell their house very quickly. So they're going to slash prices. Americans aren't going to be able to afford the houses that they currently have, and they're going to want to get rid of them. Now, why this is so big for the housing market in 2022 is it's kind of creating a more natural situation for buyers to come in and purchase a lot of these homes at a discount. If inventories continue to rise and demand continues to fall, well, at some point, prices are going to follow suit. Prices are already getting cut in the United States, and that's creating a lot of FOMO for buyers and sellers. Sellers want to sell their house right now because they feel like this is the best offer that they're going to get for their house, but nobody is buying. And sellers have to be very careful because they don't want to sell their house for less than what they bought it for. If they do that, then they're going to create a really bad situation in the future if they try to get a new home, because they might not have as much money and they might still be in debt. The same thing is going on for buyers. They want to buy a house in 2022 because they feel like this is the best deal that they're going to get as interest rates go up, and it just gets a lot more expensive to own a home. Expenses and taxes and insurance are going up in the United States, and we don't know what's going to happen with the recession, so buyers have to be very careful that they buy a house that they can afford today because they don't know what's going to happen tomorrow. And that's why this is one of the biggest generational shifts that we have seen in the housing market. Inventory is going to start going up, but we don't know how home affordability or inflation or our economy is going to look between the next 6, 8, 10 months or even a year. If Americans continue to get squeezed by inflation and interest rates go up and we're in a recession because millions of people are losing their jobs, then nobody is going to be able to afford a house. If they don't have any income, then they can't buy a house. All of that inventory is still going to be sitting there. Right now we have a ton of inventory. Home builders are still producing houses, but they're not even on contract in a lot of cases. So a lot of these houses are just sitting on the market while all of these home builders are taking on this debt. If that was to happen and sellers can't budge on their prices and home affordability continues to stay out of control in the United States, then nobody is going to want to buy a home or be able to financially. That means that home sellers are going to have to slash their prices and slash their prices until, seriously, they're just going to have to give these homes away. We could start to see double-digit price cuts throughout the entire United States sometime soon. And how long they stay that way is all going to depend on what demand looks like down the road and, of course, what prices are. The Federal Reserve also has a huge role in this because if they keep interest rates high, well, that's going to mean millions of people simply can't afford a home. So depending on what they do, if they start to lower their interest rates again, prices come down, that's going to bring a lot of demand back in. We could start to see spikes in the housing market after that point, but if everything stays pretty high for a very long time, well, prices will also go back down because demand just won't be there. That is going to shift the housing market for the future, and everything is going to be changed. But now I want to hear from you on this issue. What do you think about these two issues facing the housing market? Do you think the housing market is going to continue to boom, or do you think this cool off is eventually going to turn into a crash? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.